So last week when we hosted our sorry, good evening everyone, and then welcome to the first. I think okay, this is the second session we're going to be doing for this year, the second free session we're going to be doing this year, and just like we discussed last week, we're looking to revive what we're doing last year or the better part of 2024 and then some part of 2025. We're looking to revive our free sessions whereby we come together, we try to solve trading issues we might be facing. Do you get? We analyze charts, we pick different issues, different topics, and then talk about them. The goal here is just trying to make sure that after every session or after every session like this, we are becoming better traders. And that's what we're still carrying into this year. So we're looking at it that whenever we host these sessions, whenever we pick topics and then discuss, after every session, everybody is going back a better trader. Even if you don't reach that profitability after one session or after a couple of sessions, you see that your trading becomes better. So that's what we're looking to achieve. Especially this is more or less for those that are coming here for the first time. Now, when I sent out this link, or before I sent out this link earlier in the evening, I was thinking of what topic we should discuss. And I think one of the things we said, let me pull up my iPad. I think I jotted down some things here. And I think I decided to pick a topic, the trading process. It's something I've always spoken about and it's something that I talk about a lot. But then I wanted us to go over it again. Now, what is this trading process or what's this topic, the trading process? So it's more or less looking at what a trading system looks like, or what as a trader, whenever you come to your charts, what is expected of you. Now, why did I pick this topic? It's because a new year is starting, especially for those of us that have been trading or started trading maybe last year or before last year, but then we're getting into a new year. Most of us will be coming with that whole resolution that, as I'm entering this new year, I am going to work on my trading strategy. I would make sure that this year I would get a trading strategy that works. I'll get a trading strategy that is profitable. It's and it's something very, very personal also, because when I started trading, especially before I started seeing some sort of profitability in my trading system, every year was more or less another go at everything. Do you understand? Another go at trying to get a strategy that works. Another go at another go at profitability. Do you understand? So I know that even if it's not everybody on this call, there are certain people on this call that have that same how will I put it, thinking in their mind, where they are looking
Man,
at
when you use that water, put that other bucket,
they
I
are
beg
looking
you.
at they are looking at it that at the end or as this new year is starting, they should actually get a trading system or a trading strategy that works. So we're going to start with talking about what a proper or what a profitable trading strategy should look like. Do you understand? We're not going to go into the deeps of like, oh, what each should be like, but then we'll try to equip us with what we should look to work towards. So if we say a trading strategy, you have this, then you go around looking for, okay, what is the best way to approach this thing? What is the best way to approach this other thing? And then you put all those things together and then form that trading system. So that's what we are going to be looking to achieve today. Yeah, and for those that will be watching this video later on YouTube, you can like and subscribe to the page. And if you don't want to miss any of our future sessions, you can join our free Telegram channel. It's free. We drop signals there, we do classes there. Everything is free. We're just looking to build better traders. So now let's get started. Uh let me share my iPad screen. One sec. So can you guys see my iPad screen? Please, if you can see, just drop it in the chat section so I know that we are
Yes, sir.
together. Okay, good. Yeah. So, trading process. So, let me check this on my phone and then see what notes. Okay, one of the topics was actually a trader's mindset. So I think that's what we're going to do next week. So now we'll start with the trading process. Now, like I said, what we're trying to achieve or what I'm looking to achieve, yeah, at the end of this class is that everybody, if you've not had an idea or if you've been looking at working on your trading strategy, you should have an idea of the things you should be looking out for or the things you should be looking out to fix. Do you get? That's what we're going to be looking at. Now, we'll start with what a trading strategy is basically. So most times when we talk about trading strategies, people think that, oh, there's that one thing, there's that one magic thing that somebody will tell you that, oh, this is a trading strategy. And then you apply it on your charts and then you start making profits. But in the real sense, yeah, a trading strategy is not just one thing. A trading strategy is different parts or different tools coming together to form one solid machine that works. Now, this explanation I'm giving is sort of like, I don't want to say advanced, but then it's more or less like piecing things together, piecing different things together so that, or piecing different important things together so that you can form one system that helps you catch buys or sells in the markets. Now, this thing is not just one thing. It's not like there's that one straightforward thing that you look out for and then you catch trades. There are different things that actually come together. And when we're talking about this trading strategy now, or why this trading strategy is important is because trading is probabilities. Do you understand? Trading is probabilities. And if if it was not probabilities, I would just jump on my charts and then like take a trade or risk everything in my account and then make money. Do you understand? But it's probabilities. There are days that I will take a trade and then have losses. Do you understand? And if I don't even know what I'm looking out for before I jump on those trades, I'll just end up taking losses. So I need something that can come assist me to actually show me where those opportunities are so that I don't just jump into the market blindly. Do you get? If there was no need for anything strategy, we could just jump into the market blindly and then make money. I don't think we'd be on this call. Do you get? So we actually need that thing that tells us that okay, at this point, it's best for us to look for a buy opportunity. At this point, it's best for us to look for a sell opportunity. Somebody saying something. Are you guys getting the idea? So now let's start with the basis of every forex trading strategy. The basis is the whole idea of market structure. Now, what is market structure? Market structure is basically how the market moves. And what we're trying to use market structure to achieve is to basically know, okay, as I'm coming to my charts, should I look for buy opportunities or should I look for sell opportunities? And this thing is very, very important because without it, when you jump on your charts, even if you know other things like conformations, other things like zones, other things like candlesticks, other things like chart patterns, if you don't understand market structure, you would not know which opportunities to actually jump on. I used to share this experience where when I first started trading, I think I went to YouTube, Jeffrey Benson's YouTube, and I learned what's it called again? Psychological levels. And then psychological levels used to work very well on BTC. Like I would see that whenever price gets to like a psychological level, there'll be a tendency to react. Now, psychological levels was the only thing I had. Do you understand? Like it was the only thing I knew in trading then. And then I just dove straight into the market and then I started jumping on buys or sells at psychological levels. And honestly, it was not funny. Do you get? Now, when I look back at most of the trades I analyzed then, one of the key things that was missing was market structure. So I did not have an idea of when to look for those buy opportunities. So if the market is moving a certain type of way, if you're looking for buy opportunities using those psychological levels, you get those opportunities more, or you get more winning trades than just jumping in blindly. So everybody, if you're looking to get a good Forex trading strategy, the first thing you should look to fix is market structure. Under market structure now, you should be looking at knowing the different types of movements of the market, which are uptrend, downtrend, and then ranging markets. Now, like I said, know the different types of movement, not just the different types. Also, know what makes an uptrend, what makes a downtrend a downtrend. Do you understand? At what point, how do you recognize an uptrend? So there's this thing I say about understanding market structure. This one, my students are like aware of it, where I say that you should look to understand what it is, what it looks like, what it looks like. Sorry. And then how to use it to trade. So now, what this means is that if I'm learning something like an uptrend, I should be learning or I should be focused on learning, okay, what is an uptrend? What does an uptrend look like? Do you get how do I identify an uptrend? And then when I identify it, how do I use it to trade? And honestly, if you miss one of these three things, you would not get it right. So if you know what an uptrend looks like, but then you don't know how to use it to trade, then it's useless. And a lot of traders are actually stuck at this place where they know what an uptrend is. If you ask somebody what's an uptrend, they'll be like, oh, it's when the market is moving up. But then identifying it is a problem. Using it to trade is a problem. They know that, oh, you are supposed to buy in an uptrend, but then how do you buy? Like, if you see an uptrend, do you just dive in and start buying immediately? All those things are questions you need to answer. Now, when you do this, you also need to know when an uptrend stops being an uptrend. When does a downtrend stop being a downtrend? And then what makes a ranging market invalid, or what makes price exit a ranging market? All these things are things you should also know. Now, like I said, after this, know um, what invalidates them. Yes, invalidates them. So these are like the key things I feel you should look to understand about market structure. Now, the next thing we'll talk about, or the next important thing, is the whole idea of zones or areas of interest. Areas of interest. Some people call them areas of interest. Some people call them points of interest. New traders, if you've seen anybody's charts and you see that they put POI on their charts, this is what they are talking about, or this is what they're looking at. So now, zones basically are levels that when price gets to, there's that potential that it will react or it will reverse. Do you understand? Most times people are looking at, okay, how can I catch that sniper trade? That trade where once I enter, market will reverse from that place. It's the whole idea of zones. When you know zones, you know that, okay, once I jump on a buy or a sell at this point, there's a potential that price will move from that level. So this thing doesn't just work on its own. You have to pair it up with market structure. What do I mean by pair it up with market structure? Those of you that are aware of what an uptrend is, an uptrend looks like this, something like this, where we have higher highs, higher low, higher high, higher low. And then price creates a higher high. Should we start jumping? There's that question that you'll be asking yourself, should I jump on a buy here? Do you understand? Which if you jump on a buy here, there's that potential that price will start dropping to the downside. Now, when price starts dropping to the downside, at what point do I know that the higher low, or at which point do I know that the higher low will stop for that whole reversal to the upside? Do you get? There are, I feel like three things that will be running through your head. First is that if I'm looking to buy down here, what if price stops up here and then pushes up? Do you get? Or if I look to buy up here now, what if price goes down first before pushing back up? Or what if I even jump on it here, or wherever I jump on it, price will just continue going to the downside. So that's what zones are coming to do for us in the market. They are coming to give us that right spot. In as much as we have an uptrend, we're not just diving into the market blindly and taking buys. We know those pinpoint levels where we're jumping on those buys. Now, the funny thing, or the sad, or the no, no, not the sad, the interesting thing about zones is that There are a lot of them. Now, why are there a lot of them? There's this thing I tell my students, or I tell most people I talk to about trading, that whenever we see price push up like this, whenever I see price push up like this, and then price starts retracing, there are certain people that prefer to buy from here. There are certain people that will prefer for price to go down first before they get to what buy. There are certain people that will want this retracement to retrace fully to this level before they buy. Do you understand? Now, does it mean some people are wrong? Does it mean some people are right? Or does it mean that some people are better than others? No, it's not that. It's just preference. Do you get? It's the same way that all of us can go to the market now and then we go to buy, let's say, this pen I'm using. And then some people will be willing to buy it for like 200K. Some people will be like, nah, fam, they cannot buy it for more than 100. Some people like, I can buy it for 150. And then maybe the seller wants to sell it for like 300. You get? So there are different levels where certain people will be willing to what? Collect this item. It's the same thing with the markets. There are certain levels that different people are much more willing or much more comfortable to jump on their trades at. Now, if some of us are familiar with trading, or if most of us are familiar with trading, you'd know that what moves price in the market is orders. Orders in the sense that trades. So if I have a lot of trades, let's say the people that are willing to buy from here are a lot, then price will actually stop here and what? Push to the upside. Now, like I said, these zones are a lot. What I would recommend is that look for profitable zones. Do you get? If you know a trader that you admire, meet them to teach you which zones they jump on trades at. This is where trading starts becoming different. Market structure is the same thing for everybody, but then zones vary from trader to trader. So you can look to meet somebody to learn, but then the popular ones out there are things like support and resistance, things like trend lines, things like that's Fibonacci, things like order blocks, things like fair value gaps, things like breakers. All these things, anything that talks about this is where I am looking for price to tap before I buy or sell, it's a zone. And there's this thing that traders get to face where maybe you meet a trader. I'm somebody that learns how to use support and resistance. Then I meet a trader and then they start asking me, do you know what order blocks are? Um, you say, oh no, I don't know what order blocks are. They're like, no, you don't know how to trade. Nah, it's a lie. Do you understand? All these zones are high probability levels. Now, when I say high probability levels, they are levels that have both series of wins and losses. So nobody should tell you that my own, you cannot take losses with it, or my own is the best. That's their own, so you get how they take loss. Now say they know they show you. Do you understand? And I'm pretty sure that all of us have been through this where you have somebody that you're looking at, and then maybe you look at the person's status every time the person is posting W's on the charts every day. And then you meet the person, and then the person is like, oh, this is what I'm using to jump on my trades. Maybe it's because you don't know it. That's why you're not making profits the way I'm making. And then you now go and learn that thing or try to learn that thing and say, oh, let me tag along and trade with this person. And then you start seeing that, the W's, you don't return L's. Do you understand? So I'm pretty sure almost all of us here have experienced that thing. So pick one of these zones. Do you understand? You don't have to learn all. Pick one of it. Do you get? Learn and master it. Know the in and outs of it. Do you get? People that know me and then know about my trading know that there's nothing you want to tell me about something like Fibonacci. Do you get? It's something that from my sleep, I know how I know, like, I know the different times to use Fib. I know when not to use Fib. Do you understand? And all that is coming from using it for the longest part of my trading journey. Do you get something like Fib, something like support and resistance? But then when we start talking about things like order blocks, trend lines, fair value gaps, I have an idea of them, but then I cannot talk to you about them like someone that uses them to trade. And it's fine with me. Do you understand? Somebody that uses them cannot come and tell me that, oh, I am getting more W's on the chart than you. Now, fam, I understand that all these things are high probability. Do you get? So if you're looking to build that forex trading strategy, once you understand the market structure, the next thing you should do is pick one of these zones, learn it, and master it. Do you get? Now, if you see that you don't learn one zone like this and then you're using it and the thing is still not giving you profits, then drop it, find another one and learn. Are you guys getting the whole idea? So that's what I'm going to advise. Now, the next thing we'll talk about is the whole idea of entries. I think I'll change the name of this topic, entries and entry confirmations. Entry confirmations. Now, what is this talking about? The first part here, entries. We're looking at how do we react when price gets to these zones. So if I'm looking at buying at, let's say, I'm looking at buying at a support, sorry, at a resistance, don't support, price taps there. How do I react? Do you get, as a trader now, how do I react? Why is this question important? Because if I decide to buy here immediately, price might just not stop here. It might continue going down first before it reverses. What if I jump on it and that time that it's going down, I lose all my money and then price still reverses and goes back up? Do you get? Now, that's the first part. The second part is entry confirmations. How do I know that price is going to react at this point or at this level? Do you get? Let's not be that this is a resistance not support. I buy here, price doesn't stop there. Price goes down first before reversing. And then by the time it reverses, I'm already losing all my money. Do you get? If there are any extra confirmations I should look out for, what are those extra confirmations? Now, when it comes to entries, you would always have, no matter the type of trader or no matter who the trader is, you would either enter your trades aggressively. Shane also this very aggressively or conservatively. Sec. Let me draw this conservatively. Now, what do I mean by entering trades aggressively or conservatively? Now, aggressive entries are more or less those entries where, as price is tapping that your zone, this level where we're looking to jump on our charts, sorry, jump on our trade, this level here, as price is tapping inside, you're executing your trade. Do you get? But then here's the thing. If you jump on that trade without any confirmation now, you have to factor in no, the entry is not the problem. Do you get? The entry is not even the problem. It's the exit that is the problem. So we'll start with our stop loss. Since I'm jumping on this trade here without any confirmation, if price starts going down, at what point is this reversal enough? At what point should I pack my bags and leave? Do you get? So entries. Now, the title of this topic is entries and entry confirmations. It's supposed to be entries and exits and entry confirmation. I think I'm going to change the name to that because most times as traders, especially as beginner traders, we focus so much on trying to get trades that when we start catching trades, we will come discover, say, oh, this thing no stop here. Oh. I'm catching buys, but then I'll analyze my trade and then wait for a buy. Price will come, tap my zone, I'll jump on it. But then the market will continue going down. When my accounts don't blow, now then market will start the push up. And it will continue going up for long, especially on gold. I've seen a lot of people complain about that. Especially when gold was doing that whole bull run where price was pushing up, pushing up, pushing up. Now when you can't decide buy now, gold no go buy. Do you understand? Gold will start going to the downside. But then you see that downward movement now, before it will stop and then continue going back up again, all your money will vanish. Do you get? So at what point do we know that it is enough? That's for your stop loss. And honestly, the rule of thumb, I really don't want to talk about the rules there, but then just investigate, okay, what's the rule of setting your stop loss? And then what's the rule of setting your take profits? Do you get? Now, you see that from getting our market structure, getting our zones, the next thing we're talking about here is entries, exits, and entry confirmations. I feel all of them work together. Because now, once I jump on this trade, I have to figure out where I'll exit, where my stop loss and take profit will be. For the take profit side, even if I catch this buy and price starts pushing up, it's not going to push up forever. And I'm pretty sure that, especially for all of us that are active in trading, all of us that have traded live accounts before, I'm pretty sure that we've experienced this thing where We jump on a buy, and then price starts going up. Price continues going up, and then maybe you're making like $500. Now, mind you, this $500 that you're making, you are begging price from $100 to move to $500. Now, price gets to $500, and then you start praying for $1,000. You pray, and then you see that okay, price reach $1,000. You start praying for 2K. You see that it's never enough, especially when you hustled for that trade. Like maybe you've not traded for a long time, and then you hustled and then cashed out. You would want to milk it as much as you can. But then here's the sad thing about price, especially in short-term price movements. Price will never continue going in that direction forever. At some point, we are going to get what? A reversal. So now you have to know the rules of setting your take profits. And you have to know the rules that where and then why are you setting your take profits. So I'm going to say take profit and stop loss. What you should know about them is where and why. Now, why is this thing important? Know where so that you avoid those reversals in case of take profit and then avoid price going against you too much in case of stop loss. But then why? Why is this why important? It's because when you know why you're putting your stop loss take profit there, even when you see that price is going up and then it starts doing as if it wants to come down, you will not shake. You know that, this take profit is here because before price reverse, it's supposed to hit that level first. Now, for your stop loss, if you know why, it helps you in the scenario whereby you see that you jump on a buy and then price starts going down and then it starts getting near to your stop loss and then it starts running and then shifting your stop loss. Once you know why you're putting your stop loss there, you're not going to shake. You are not going to be hustling to like move your stop loss. No, you're not going to do all of that because you know why you're supposed to put it there. Are you guys getting the idea? So please, in as much as entries are important, your exits also are important. Are you guys getting the whole idea? Know where to drop your stop loss and take profits, and then why. Now, the next thing I'll talk about here is these entry confirmations. Why these entry confirmations are important is because it's calling me. It's important because it, in as much as these zones are levels where price could potentially stop and then reverse, it's not a guarantee that price will stop there. So when price gets to these levels, you're trying to look for that extra confirmation that price is going to react there. So if I have this level, let's say I wanted to take a sell, it's a downtrend, and then I see that when price gets to like the other block here, there will be a potential for a sell. Once price gets here now, I'm trying to look for extra confirmation that this other block is going to hold. Do you understand? And when it comes to these entry confirmations, it could either be it could either be one sec. It could either be market structure confirmations. Or candlestick confirmations. Now, if you've been trying to learn the different types of confirmations we have in the market, what I'll employ you to do is go and try to learn market structure confirmations and then learn candlestick confirmations also, and then pick which one you prefer and then master it. Do you understand? So now, once you've learned market structure, which is how to get or how to know what opportunities to look out for, and you learn your zones, that's where you should jump on your trades, and then you know your entries and then entry confirmations and then know rules for setting your stop loss and then take profit. The next thing that is important that you learn in this formation of your trading strategy is the whole idea of top-down analysis. Now, I'm pretty sure that all of us here, especially when we started trading, we always wondered about this whole issue of time frames. Not just time frames, but then trying to know, okay, which time frame is best to use. Do you understand? Why? Because you go to the 1 hour time frame, and then 1 hour time frame is bullish. Do you get? And then you now go to the 4 hour. 4 hour is doing downtrend. And then it starts becoming a problem. You're like, which one should I use? Do you get? What if I take that buy on the 1 hour time frame, and then since 4 hour is bearish, I end up taking a loss? Do you get? So what we're trying to do with top-down analysis is basically understand the idea of these different time frames and how they basically affect our trading. Not just that, know which time frames to use and then what to use them for. Do you get? Now, I'm going to just summarize this as first, you're trying to know the different time frames to use. Now, when it comes to different time frames to use, depends on the kind of trader you are. Do you understand? Whether you are a day trader, whether you're a swing trader, whether you are a scalper, whether you are a positional trader, I'll just stop at swing trader. But even if you're a positional trader, yeah, your time frames will be different. Your time frames will vary. So, first of all, figure out the type of trader you are. Now, if you are a beginner here and you're still trying to figure out which type of trader you are, just evaluate yourself on three things. The time you spend on your charts, your if I say risk appetite now, some of us still never sabi on a risk appetite. Some of you think that you're high risk traders, you like high risk. But if you deposit money now, lose $10 inside, go on cry. So um time, risk appetite, and then your lifestyle, or you can say personality in this case. Now, when it comes to time, why it's important that you evaluate yourself on time you spend on your charts is because if you're somebody that doesn't have time, like in a day, it's only once or twice you have time to look at your charts. Don't be afraid, you can still trade. But then you cannot go and say you want to trade lower time frames, like the 1 minute time frame, 5 minute time frame. Do you understand? Because most of the time you're not going to be on your charts. Do you get? But you can trade higher time frames. Now, when it comes to risk appetite, if you're somebody that you have $500 on your first trade, you're risking 300 or $200. You cannot go and say you want to trade the 5 minutes time frame. The 5 minutes time frame that in 1 hour you see three trades. What if that first one now you lose $200? Second one you lose $200. What you remain with now 100? Even if the next one is a winning trade, it will just give you enough money to cover up for that. Maybe it will just give you maybe $300 or another $200. Do you understand? So it's not wise.
Don't-
If you're somebody that has a high risk appetite, I think my connection is unstable. Are you guys hearing me clearly? I got a notification that my connection is unstable. Can you guys hear me? Please let me know in the chats. Okay, good. So now, like I was saying, if you have a
You
high
can
risk
hear
appetite,
clearly.
look to trade higher time frames. Do you get? If you're somebody that doesn't mind breaking down your risk, do you understand? Cutting down your risk to like small, 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 small chunks, then you can look to trade lower time frames. Now, when it comes to lifestyle, yeah, most times when I title this lifestyle, it's just talking about patience. Do you get? If you're somebody that is not patient, my students know that I used to always gist them this gist. They just don't cast self. Like I'm somebody that I know sure say I need patience. Do you understand? Like if you promise me something and you tell me that you give me on this day, sure even before that day, I go don't start a bomb you. Do you understand? The one that happens a lot is when I order something. Every time I'm always checking like the progress, where the thing dey. Do you understand? When are you guys going to deliver it? Do you get? So something like that? I cannot expect someone like me now to go and start doing swing trading. Do you understand? Who do I want to give heart attack? Do you get? Most times when I hold trades overnight, yeah, except maybe I hold them on like small accounts. Most times when I hold trades overnight, if it's like a big account, I'll stay awake with that trade. We'll go do vigil. Do you understand? So imagine now I'm doing swing trading constantly where I'm holding trades for 3 days, 1 week. Ah, I feel no they sleep throughout. Do you understand? So that's something you have to factor out. Now, trading is something that you're supposed to build around yourself. Do you get? If you build trading around another person's self, or more, you're just fooling yourself. Do you understand? So evaluate these three things and then decide which type of trader you are. Know that day traders, you're not holding trades more than 1 day, highest 2 days. Scalpers, you're trading lower time frames. As they jump on trade, you're looking to exit in the next maybe 1 hour, 30 minutes, or even 15 minutes. And then swing traders, you're holding trades for days, for weeks, maybe even 1 month. Are you guys getting the whole idea? So evaluate yourself and then decide which type of trader you are. Now, once you decide which type of trader you are, then you start knowing which time frames to use. Now, when it comes to identifying which time frames to use, know that every trader is supposed to have a directional time frame, a mid time frame, or a time frame for their zones, and then an entry time frame. So your directional time frame is mainly your highest time frame, your biggest time frame. That's where you're looking for market structure at. You're looking at the direction of the market, whether price is bullish or bearish. Is that direction that these lower ones are going to be working towards? Now, your mid time frame now is where you're breaking down that higher time frame movement to get opportunities. What do I mean? Let's say you're a day trader. Please hope you guys are following and hope I'm not leaving anybody behind and hope the whole class is not boring. Please, if you guys are following, just drop emojis in the chat so I know you guys are with me.
Party. That's good.
Nice, nice, nice. So let's continue. Now, let's say you're a day trader and then you analyze your directional time frame is definitely going to be the 4 hour time frame. You analyze your charts on the 4 hour and then discover that your chart is, let's say, bullish. Do you understand? It's doing something like this. Now, mind you that you see this price movement to the upside. This is definitely going to be like 4 hour candles. It's going to take at least four hours before these candles create. So if you're looking to say, I'm going to buy on this 4 hour time frame or get my zone to buy, if you highlight this zone here, before price reach there, it's going to take multiple 4 hour candlesticks to drop there, which is going to take at least maybe 2, 3 days before you get one opportunity. Which, if you're behaving like that, or if you're moving in the market like that, then it invalidates the whole issue of you being a day trader. That one now, you're more or less a swing trader. So, as a day trader now, what you're looking to do is,
Huh?
where as you're seeing that price is bullish and it's pushing
Now
up
my
in
bag, I know.
you're looking to break it down to a lower time frame, maybe like the 1 hour time frame. Yes. Do you get to see that whole you see this whole push to the upside that is one move on the 4 hour. On the 1 hour time frame, this is what it's going to look like. So what you're going to be doing on this 1 hour time frame is get zones, wait for price to tap inside, you execute your trade. Once it creates another high, get another zone, tap inside, you execute. So you see that instead of catching just one trade, you're catching multiple trades in that whole push to the upside. That's why your mid time frame is important. Now, your entry time frame is basically where you're looking to get your entry confirmations. So once price taps your zone, you're looking to go to your entry time frame to look for a confirmation before you jump on that trade. Are you guys getting the whole idea? So the key thing with top-down analysis is that you're first of all trying to figure out which time frames to use as per the type of trader that you are. So if you're a day trader, you know which time frames to use. If you're a swing trader, you know which time frames to use. Not just which time frames to use and what to use them for. Are you guys getting the idea? When it comes to what to use them for, it still revolves around that whole idea of a directional time frame, a mid time frame, and then an entry time frame. Now, once you've gotten all of this, I want to illustrate something to you guys. So we've spoken about a couple of things here. We've spoken about a couple of things here. We started with market structure. Let me zoom. So okay. We started with market structure. After market structure, we looked at zones. After zones, we looked at entries, exits, and entry confirmations. After that, we looked at top-down analysis. Now, you see this You see these one, two, three, four topics. All these come together to more or less formulate your technical analysis. So now when you go to your chart, after figuring out which direction price is going to, you go and look for where you can enter that trade. After looking at it, you decide which type of entry you take. You decide if you're going to use entry confirmations. And when you jump on that trade, you put your stop loss take profits. All that is under entries, exit, and entry confirmations. Then top-down analysis basically tells you which time frames to use. So you see that everything or every question that a trader will have when they look at their chart is settled with this whole process. So when it comes to your strategy relating to technical analysis, this is it. Now, another thing we need to be aware of is that your strategy doesn't just stop at technical analysis. There are also other things that come to play. Things like risk management. Now, what's risk management and what's the importance here? Why is it significant? Now, risk management is basically the process or the act of you basically partitioning your account across all your trades. So last week, I think it was Danny or so that no, it was not Danny, it was Emmy that asked me that how do you know you're a profitable trader? And then I said that being a profitable trader is not just by one trade. Do you understand? It's not just by jumping on one trade and taking profits that it's a profitable trader. If it's like that, any beginner that open metal trader and then press buy or sell and they make money is a profitable trader. But then being a profitable trader is after taking a series of trades, let's say 10 trades and having wins and losses, your account still comes out in a plus. That's you being a profitable trader. Now, what I want you guys to recognize from this is the fact that let's say you have a winning forex trading strategy. It's a 70% win rate strategy. What that means is out of 10 trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of 10 trades, yeah, 1, 2, 3, 70% win rate. Then it means 7 are going to be winning trades, and then 3 will be losing trades. Oh shit, I deleted that. Are you guys getting the idea? So risk management basically comes in to help us so that in a case where my first three trades are those losing trades, I'm still going to have money to what? Take the rest of these trades. So if I have a $1,000 account, risk management basically tells me how I can partition these accounts across all my trades. So let's not be the one that in my $1,000 account, my first trade, I risk $500. Second trade, I risk $500. I lose both of them. Then I don't have any money to trade again. That one now, I have a very poor risk management. Are you guys getting the whole idea? Now, when it comes to risk management, some people prefer to have like a rigid risk management system. And then some people prefer that whole, well, not rigid per se. Everyone is rigid if you look at it, but then I'm talking about it from a perspective of like a rigid stop loss, or some people have that whole flexible stop loss. So when I talk about a rigid stop loss, now you see people that tell you that anytime I'm jumping on my trades, I don't put my stop loss more than 20 pips, or I don't put my stop loss more than 15 pips. Do you get? But then here is the problem. On things like gold, your 20 pip stop loss, they very, very small. Do you understand? So price just taps inside and then leaks you out before it pushes up. Do you get? Personally, I am of the opinion that you should have a flexible stop loss. A flexible stop loss, how? Follow the rules of setting your stop loss and take profit. So if your strategy says drop your stop loss a few pips below the higher low, always put your stop loss there. Sometimes it's going to be 15 pips, sometimes it's going to be 10 pips, sometimes it's going to be 20 pips. Do you get? Now, one might be asking, if I'm putting my stop loss like this, how do I achieve, let's say, the amount I want to be risking? Because if you have a 20 pip stop loss and you know that you want to be risking $20 per trade, you know that the lot size you're going to be using for every trade is going to be 0.1. Simply that. Do you understand? But then when your stop loss is fluctuating, how do you know which lot size to use? In that case, you have to bring in your risk calculator. So your risk calculator is basically where you go and then tell it that this is the amount I want to risk, maybe $20. My stop loss is 10 pips. Do you understand? what lot size should I use to achieve this? And your risk calculator will calculate it and tell you that, Omo, if you want to reach this $20 and your stop loss is 10 pips, the lot size you use is 0.2. Are you guys getting the whole idea? So every trade you take, before you take that trade, you use your risk calculator. Now, if you're asking which risk calculators to use, these are the two I recommend. Either Stino or what's the other one? Or Nash Markets. Now, what is Stino? Or how is Stino? Stino basically is paid. Yeah, Stino is paid. I think it's $14 every year. All of now for this Zoom call pass $14 every year. Do you get? So it's not costly. And then Nash Markets is free. But then Stino is straightforward and simple. But Nash Markets, it has a lot of things that you have to fill before you jump on your trade. Now, after getting your risk management on point, the next thing I feel you should start looking at is things like journaling. These things are things that seem like they are simple, but they are things that are very, very important. Journaling, backtesting, backtesting, and then, yeah, journaling and then backtesting. So when it comes to the whole idea of journaling now, every trade I take, I am trying to record data on it. Why did I enter? When did I enter? How did the trade end up in profit or loss? What this does for you is that you have a clean record of all your trades. You have something to look back at. So let's say you're testing a strategy and then you have a journal. You go back and then see that, after 10 trades, it's only 3 trades that I had as winning trades. And all these winning trades came from me using this strategy. So what this means is this strategy is not really working out for me. Let me dump it. Do you get when you're journaling, you're seeing things that are working and things that are not working. So you can easily drop things that are not working and then continue doing things that are working. That's the whole use of journaling. Now, the whole idea of backtesting is you going back, let's say after every week, and then looking at maybe opportunities you missed. Do you understand? Looking at trades that you could have taken. Do you understand? And look at how you can refine your strategy. Or if you're just beginning out, maybe you learn a strategy, you can go back and then backtest it. TradingView has this rewind tool. If you cannot use TradingView, if you cannot pay for TradingView, because I think the thing is like 24,000 now every month. If you cannot use TradingView, use um what's that thing again? I have it on my iPad here. One sec, let me check. It's this app here. No, it's not here. Yes, it's Go Chatting. Yes, Go Chatting. So use Go Chatting. Go Chatting is free. You can rewind your charts for free. So use Go Chatting and test out your strategy. Do you understand? All these things are things that would actually help that your trading strategy. So you can decide that, I'm going to be backtesting every one week, every two weeks. Do you guys get the whole idea? So personally, when it comes to the whole idea of looking out to build a trading system for this year 2026, these are the things you should look to work out or work on. The first one being market structure, second one zones, entries and entry confirmations, then top-down analysis. Then when you finish that, learn risk management. Then when you finish risk management, start journaling your trades and then start backtesting. And trust me, if you follow these things, I'm not saying these things because maybe I went to go and read it on ChatGPT, or I went to go and watch one YouTube, or I went to go and use Wikipedia. No, I'm saying these things from experience. These are the things that I did personally that changed the trading game for me. Those of you that know me before maybe 2022, those of you that know about my trading journey since like 2021 know that every bloody day from 2021 down to like 2022, I think I stopped around 2023, where I was doing live sessions every day. Now, what those live sessions did was some sort of back testing, but then not back testing, but then forward testing, checking out strategies every day to see if they work. Do you get? So these things actually help you. And over time, you might look at them and say that, oh, these things are not that important. Do you get? But bro, like just sit back and then follow this formula. Do you get? And if at any point, yeah, gochatting.com. Yes, someone just dropped it in the comments there. It's gochatting.com. Okay, someone asked. No worries, I'm going to take questions after this. So just follow this thing. And honestly, if you guys want this note, I'm going to send this on the group chat also later when I finish converting the video and all. And if you have any issues when you're trying to like follow this whole thing up, feel free to reach out. Do you understand? And then we look at the progress you've made, and then what we can do better or where we can progress or where we can go moving forward. Do you understand? That's basically it. Now we have as much time as we want. I'm going to say this after last week's class, where our class ended after was it 40 minutes. I went to go and subscribe my Zoom, so now we can talk for as much as we want. Do you understand? But then I recommend maybe 30 minutes, so I can take questions now. And then if you have any issues, even if it's not among what I spoke about, or the issue you're having is among the things we spoke about, you can just look to ask, and then we just briefly talk about it. Why I say briefly is because going forward, our next classes will be taking all these things one by one and then breaking them down and then spreading them out so that you know what exactly to look out for. Do you guys get the whole idea? So please, you can ask your questions now. Now I'm going to take Fortune's question. He asked, "What do you basically?" I beg, I say he asked. Hope say Fortune no be woman. What do you basically have to jot down when journaling? Now, there's no perfect or there's no one formula for what to actually put when you're journaling. But then here are a few things. I feel the details of your trade are important. Details of your trade. That's of your trade. That's your entry price, your stop loss and take profits. um Something about the strategy you use to enter the trade, and then whether the trade ended up in profit or loss, P or L. Now, another thing you can jot is your psychology. When I say your psychology now is you can look to record, you can look to record how you were feeling before the trade, before the trade, after the trade, and then maybe during the trade also. So what this helps you is that you track your emotions and then you track your feelings. And another thing you can include is if you followed your forex trading strategy. So these are like a few things I feel you should record when you're like jumping on your trades. Now, you don't have to record all of them, or you don't have to go and pick another person's templates. When it comes to journaling, it's different for everybody. And please don't include too much information that your journaling becomes stress. Do you understand? Because there's this thing where we want to record every information and then we decide that we journal after every trading day. And then when we go back to journal, the thing be work because we took a lot of trades. Do you get? And then you miss one day, you miss 2 days before you know you abandon your journal. So make it as simple and concise as possible. Yeah, that's what I'm going to say. Is there any other question before we call it an evening? Any other questions, guys?
Uh, so,
Yeah.
so good
Yes.
evening.
Good evening.
My issue has always been on how to conquer greed
How to
because
what?
everybody conquer greed
Counter
because
greed.
everybody want
Okay.
buy Lambo yes, and we can only buy Lambo using 0.01.
Definitely.
We want to go all in. So like it's not as if it's bad to like go all in, but at the same time, if we are trying to like go all in, we're not
Yes.
getting lots of losses. So how do we like curtail the situation
Okay, okay.
before and
So,
after because it has after effect?
okay, so you see trading, especially when you're starting trading with a zero account balance. Yeah, when I say zero account balance now, it's not necessary that your account balance is in zero, but you don't have like $10,000, $20,000, right, lying around to like trade. Yeah, it's a slow ladder when you first start. I get in the whole idea. So personally, I feel like that greed comes from our expectation. Do you understand? Our expectation. Now, expectation. Expectation is not bad, but then some of us start expecting that once we get into trading, after 2 to like 3 months, we should make millions. Do you understand? The other thing is, after expectation, or we expect that once we do trading, trading is going to solve all our problems and we're going to buy Lambo. Now, after expectations, we have our problems, our bills, our family issues, our rents, our babe to spend on, our I don't know, now we don't get babe, now we dey carry OS, all that shit. Do you understand? Money to do Oble. Do you get? So all these things are all these things are things that will be on your mind to spend money on. Do you get? And you'd be expecting that trading should um do that for you. What this causes is that when when you jump on your trade, sorry, or when you go to your charts and you see a trade opportunity, first of all, you don't know if it's going to be a winning trade or not. Maybe you take that trade, you had like $100 account, and then you risked $10 and you made $30. Now in your mind, you're like, if I use bigger lot size, I will make maybe $300. And then your next trade, you go all in. And then you see that you end up losing everything. So what I'll just say is that you see that constant, um, how will I say this? That constant slow ladder. For a start, you need to follow it. Do you understand? And I would ask you again to look inwards. What do you think is fueling that whole desire to make more? Do you understand? Or get a lot of money? No, we all want to get a lot of money from trading, but then you have to understand that it's a process. So you have to understand what is pressuring you to get it immediately. Do you understand? Ask yourself those questions. And honestly, when you ask yourself that question, then you can start finding solutions to them. Let me give you an example. If it's maybe your rent is going to be due in like a couple of months, and maybe your rent is like 1.5 million and you have 500K, and you want to deposit that 500K and then flip it to like that 1.5 million. Please, you have to know that you cannot do that. What you need to do is go and start finding other maybe not be another side hustle per se, but then even if you want to trade it, don't trade the whole $500. You can decide to use $100 inside and buy prop firm. Do you understand? But then you have to understand that it's a slow grind. And funny thing, I would not even advise anybody to go and say, maybe like at my stage now, I can decide to say, oh, I can put the burden of my rent on trading. Do you understand? Because it's something I'm doing every day. I understand the ins and outs, but then as a beginner trader, it's not fair. Do you get? Because now, instead of you learning, you're more or less just looking at profit or loss only. Every day you wake up now, anxiety for your chest. You're going to your chest to just look at whether I make money or not. Do you get? So it's not fair. What I would advise, like I said, is look inwards and then ask yourself that question. What is fueling that whole desire to make more? What is pressuring you? Now, once you can answer that question, then you can start finding solutions to that problem of greed. I think that's just it, basically. Did I answer your question or did my answer basically help?
Yes, I yes, you did.
Good.
Thank you.
No worries. Any other question?
Yeah, I have a question. Not really a question, but I don't know if you can see my comments in this chat.
Yeah, I can see your comments. You dropped something about I shared a copy of my view on GBP USD. Can you take a quick look at it and tell me what you think, please? Okay, let me download the image and then send it to my iPad. Give me one sec.
Okay,
Yeah.
thank you so much.
Just give me a minute. I downloaded the file. I'm trying to get it. I think it's saved to documents. I think this is it. Drop. So this is what you sent to me, yeah?
This
That
is
before
this is what I said.
okay, good. So first things first, what I'll tell you is that you need to be able to identify your trend. Now, I would have loved to see this, or let me just analyze GBPUSD for you. Do you understand?
Yes.
First of all, which type of trader are you? Are you a day trader or are you a swing trader?
I'm a day trader.
You're a day trader. Okay.
Yes. This analysis was done on 4 hours and 1 hour time frame.
Yeah, yeah. I can see that you said price taps a 4 hour point of interest. Are you looking to buy here and then follow price up
No,
and then sell from
no,
here?
okay. This 4 hours was on Friday, right?
Yes.
That you tap. So I
Yes.
just analyzed this today, and I'm hoping by maybe Monday
Yes.
or maybe by the end of Monday or Tuesday should have gotten to the. I'm looking to sell in
You're
this
looking,
trade.
why are you looking to sell?
Okay, because like I said, in this 1 hour, that place I marked my point of interest.
Yes.
I feel like there is a resistance level. Is there a resistance level there?
On the 1 hour,
Yes.
no, your resistance, your most recent resistance is this one. There's another resistance up here. Here is not a resistance, but we got a support turned to resistance here like this.
Okay.
Yes. So what I'll say is you see this whole thing with buyers. I get what you're talking about. Do you understand? And
Okay.
um especially as beginner traders, we look at price movement like this, where maybe we have something like this where we're saying, okay, price should go up here, tap somewhere, and then sell. Do you understand? But then as a
Yeah.
trader, this is not what you're looking at. Do you understand? You're not trying to predict that price will come and tap here, do like this, and then drop. No. Do you understand? What you're looking at is the next best move. That's why market structure is important. So if I come to my chart and then see that it's in an uptrend, even if I see that price is pushing up, at this point, I cannot buy yet. Do you understand? So I know that I have to wait for that retracement. Once price retraces, I cannot come and say, oh, um, how would I put it? I'm waiting for price to do like this, go up, do like this, then I'll buy here. No, I'll buy
Okay.
here. So it's the next best move that I'm looking at. So when we look at this GBP on this 1 hour time frame, from what I'm seeing here, yeah.
Yeah.
If you look at
Yes.
this, price pushed the downside and then created this low. This is a lower low because it broke below this previous one. Price pushed up, we
Yes.
created a lower high here. We failed to create a lower low because this low now did not break below this one here. Do you
Okay.
understand? So it's more or less an equal low. We pushed up. It's still a lower high because market has not changed yet. Now price pushed down. We still did not create another lower low. We'll still call it an equal low. Now price pushed up and then broke above the previous lower high. At this point now, the market has shifted. We're changing to another trend. So I'm going to say we have a higher high here. Market has retraced and then tapped this level. And if you look at it, no candlestick has closed below that previous low yet. So we're still having that bullish bias. So
Okay.
what price might do is buy from here to the upside. I getting the whole idea. And if
Okay.
price buys from here to the upside,
Yeah.
if it pushes up and creates a high here, this is an uptrend. I should not be looking to
Yeah.
sell. In this case, I'm looking at price forming higher high.
Yes.
Coming back down, higher low, I look to buy again. Higher high, retrace, higher low, I look to buy. Do you understand? Until price breaks a higher low to the downside, that's when I'll start looking for a sell opportunity. Do you get
Wow.
the whole idea?
Yeah.
Good. Now, another thing I want to say is that as price is here like this, what if price doesn't push up to create another higher high? What if it breaks below? If it breaks below, then you continue with your bearish bias. So as price creates a lower low, now you can look at price maybe going back up to tap this resistance here before you look to sell and then follow price to the downside. Do you get the whole idea? But then
Okay.
currently, you should not be looking for sell opportunities. Why? Because the market is still relatively bullish. It just switched from a downtrend. Now, the 4 hour time frame might be bearish. I don't know, or might be ranging. Do you get? Let me share my laptop screen and then let's take a look at it.
Okay.
Um, so that was GBP USD, yeah?
Yes.
Okay, good. So this is it. Let's go to the 4 hour time frame. So this is the 4 hour time frame. Like I said, it might be what bearish. So see as the 4 hour time frame is like this. We've been having series of lower low. Okay, yeah, lower low because it broke below this low, lower high, another lower low. Price has retraced up to create a lower high and then it's pushing down for what? Another lower low. Are you following what I'm saying?
Yes.
Now, what
Yes,
we're
I'm
going to
following.
do is, yeah, we'll try to break down this move to the downside to the 1 hour time frame. Because on the 1 hour time frame, we're going to be having series of lower low, lower high, lower low, lower high, and then we'll be looking to catch those cells. So now, if we go to the 1 hour time frame, you
Yes.
see that is this whole move to the downside here. This sell to the downside here reacted at a 4 hour zone as it's pushing to the downside here. So what you should be looking out for now,
Okay.
yeah, is that price should do something like this. Maybe as price is pushing like this, you break this level to the downside. Then you look at a retest and then a continuation. Do you understand? What I mean by that is if price push down to create lower
Yes.
low here, when you push up for lower high here, you sell, find a zone and sell here, and then look to follow price to the downside. If it creates another lower low,
All right.
look
Okay.
for a lower high, sell, and then ride it again to the downside. Do you understand? Do you get what I just explained?
Yes, I understand.
Good. Don't be looking that, oh, price should go up to like here.
Yes, I think I understand what you mean. I
Okay, good.
understood.
Good. No worries then. Is there any other question? I think we'll just take one last question, then we'll call it an evening.
Yeah. Good evening, boss.
Good evening. How are you doing?
I'm fine. How are you too?
I'm great. I'm great.
Okay, sorry, my question is on Nash Market, right?
That's Mike. Mike, yeah.
Yeah, it's Mike.
Mike, sorry that we did not have our session yesterday. I swear I forgot. I had like meetings in the evening.
Okay, no worries. So, my
Yeah.
question is on Nash Market, and this
Yes.
thing has happened to me twice. So,
Okay.
like, it was on gold. Yeah, I did this thing. I put all the imputations, everything in there that I
Yes.
required, yeah, to calculate my lot size.
Yes.
So I discovered that day. I think I wanted to risk $100 on that particular trade. Yeah.
Yes.
So when he calculated the lot size, as I imputed everything, he said maximum 100. So like
Maximum
when he
100.
said that maximum, yeah, something like that. It was on red. He said maximum 100. I think
Okay.
around. I can't. Yeah.
I
So I
think
now
I
use
think
that.
I think it's the this thing. It's the what's it called? It's the imputation of your this thing. Maybe instead of putting stop loss in numbers, you meant to go and put it in pips, or instead of putting where you're supposed to put it in pips, you put it in numbers. Do you understand? So I'm going to show you something with Nash markets. Give me one sec. So somebody is saying, boss, I'm still here. What's up? Hope everything is fine. Dan's on the phone. Okay, one sec. Let me share my iPhone screen. Oh, I have a Nash markets on my iPad. No worries. So let's go to trading view and then let's go to gold. So let's say we decide to take a sell here.
Yeah.
Do you understand? And then stop loss slightly up here and then take profit down here. Something like this for a
Yeah.
2.65 risk reward. Now let me bring in Nash markets. Yes. What's this? I cannot minimize this. Let me see something. Okay. So now, so now we have now one thing I want you to understand about gold is that you see this what's it called? You see this stop loss we have here, this
Yes.
2,207, this is 220 pips. Do you understand?
Okay.
Good. Our take profit is 5,854. That's 585.4 pips. So when it comes to
Yeah.
looking at pips relating to gold, yeah, always add a point after the last number. Do you understand?
Okay.
Now let's go to Nash markets. We have account balance. Let's say our account balance is $1,000 and we want to risk $100. Now select instruments, that's XAU USD, which is gold. And then we're looking to sell, so a short position. Now, you
Yeah.
can leave this, don't edit this price, just leave it, and then come and put your stop loss in pips. So now, if you put your stop loss in pips, you're supposed to put it in price, it's going to malfunction. Do you understand? So
Oh, okay.
yes, so now our stop loss is supposed to be 220.7. So we put 220.7. And then our take profit is our take profit is 585.4. 585.4. Something like this. And then we click on calculate. So now you see that we have it where it's telling us that the lot size to use is 0.04 lot size. With this 0.04 lot size, if price hits your stop loss, you lose $100. And if you hit your take profit, you make 265.24. Do you get the whole idea?
Yes. I think
Good.
I get
So
it
you
now.
can look to go and implement it again and then see if you have any issues, let me know. Do you understand?
Okay.
Yes.
Okay. Thank you very much.
You're welcome. Any other question before we call it a day? Okay, I was saying that I'm trying to master FIB strategy, and you said it's not every time you use it. I wanted to ask for advice on how to go about it. So, what I'll say is, okay, just give me a minute. Let me pull up. Let me see. Let me go to my YouTube channel and get a video I have on FIB. Or you know what? Just drop a message on the group. Drop a message on the group later? If you're on the group, drop the message on the group and then remind me, and I'll send you a link to a video I have on FIB. And if you watch it and then still have any issues, hit me up and then I'll try to squeeze inside my schedule and see if we can have like a live session. I know that Mike will be laughing now, but so yeah, just remind me and I'll do this thing and I'll send the link. The link for sure I'll send, but then the session, these days, man, my schedule is very, very ugly. So, any other question? Okay, so I think we just call it an evening, yeah? We started this session by 6:30 and it's to 8. We've spent That's over 1 hour, 30 minutes. Honestly, that's crazy. And I enjoyed this. And I hope you guys enjoyed it and learned something from it also. So that being said, I want to wish all of us, yeah, a very wonderful trading week ahead. And I hope that some of the things we've learned here, you try to implement them in your trading system. Now, this is where it's very, very important. It's not just by attending these live sessions every time. If you're attending them and not implementing what we're discussing here, it will not make sense. It will not help you. Even those that watch this on YouTube, please, if you watch this video and then you don't implement what you learned from this session, it's not going to help you. So as you go back, try to implement some of the things or some of the solutions to your problems that you saw on this live session. Do you guys get the whole idea? And I wish all of us a very profitable trading week ahead and a profitable trading year ahead. And for those that joined late, I'll be sending a link to this video later. So watch out on the group. If you've not joined the group, I'm dropping the link to the group now. Just give me a sec. Let me drop a link to the group. So join the group. We host free sessions there. We drop signals there. We just try to help each other. So the link to the group is in the comments. You can look to join it. And then aside that, for those that be watching this on YouTube, like and subscribe to the page. So have a very wonderful Sunday ahead. Catch you guys same time next week. Bye, guys.
Yeah. Thanks,
You're
boss.
welcome.